Hello and good evening, traders. It's been quite some time that I've not shared any video on the topic of trading or technical analysis. That's primarily because I was working on a new concept, which a part of which I would share in this video tonight. By the way, this is the 27th of August 2020. Market went through their derivatives expiry today. We can take a quick look. I've created a separate watch list for the NSE indices. By the way, those who are not aware of, TradingView is now capable of sharing future market data, the National Stock Exchange future market data with us. That's a very big positive news for the users of TradingView. This is the list of these 108 stocks which I scan, which I trade, my trading universe in the futures market. All right, so talking about the Nifty, this is an NSE indices watch list which I have here. And before I go to the full featured chart, I would like to say that I have named this approach Three Rivers Trading System, and I'll walk you through the first step of this trading system in today's video. This is primarily my screen where I look into dual time frames. Now, most of the indicators are plotted, but I will walk you through these in a step-by-step manner. So here we are on the daily time frame of Nifty, and before I show it to you what's my approach, it's nothing particularly unique or new, but I'm looking at it from a different perspective, as if looking at the same thing from a different angle. Well, see, for short-term trading, primarily those who are into derivatives market and a short-term trader, I feel that three elements are extremely important: the underlying trend of the stock or the chart, the underlying momentum or the pace at which the prices are either going up or coming down, and the underlying volatility. Now, trend and momentum, the first two, are something which I believe a lot of traders, a lot of academic work also has gone through these two aspects. Of course, momentum is the most important, or I would say, assumed to be the most important aspect of trading, because the momentum is what pushes the prices, moves the prices up or down, which creates the trend. Or else how can there be a trend unless there is steady momentum behind it? But the third element, which is that of the volatility, I think not much means yes, to a lot of extent yes, but not as to the degree at which people have walked upon momentum and trend. Now, for me as a short-term futures trader, volatility plays a very, very important role. I don't prefer to get into the stock which has already moved up or expanded its range or volatility. I always prefer to get into a stock which is sitting quiet, idle, not in the limelight of the media. A lot of people are not talking about it. And so I do pay a lot of respect and keep a separate eye towards the underlying volatility. I strongly believe that trend, momentum, volatility are very important combination. Those who are listening to me and those who are part of my mentorship trading community or have been associated with me in any of my previous trainings, then you would know that what I'm hinting towards. Now, all this while I used to use the triple moving averages. I would quickly show this to you. So those who have done any form of training with me before, you would have known that I love to use the 13, 21, 34 combination of exponential moving average, from which comes the order of an uptrend and an order of a downtrend. It has worked fairly well. It's simple. It gives a nice structure to the chart. Very good for pullback trades when the stocks go up higher than the averages. When they come down to the triple moving average zone, these are very good pullback trading opportunities, either from an uptrend, down for a long trade, or if you look into a, let's say, a downtrend when it bounces back. It's fine. I'm not saying that there are any disadvantages to this approach or this is not so good. That's not the objective of my research or the objective of the system, which is the three rivers trading system. See, the use of these three moving averages, one, it helps me to decide the order of the market, that is uptrend or downtrend. It also acts as a zone of support to prices when they approach the moving averages, right? But there's one thing, because it is moving averages, to some degree, of course, it is lagging. There's no doubt about it. And that is completely fine. We're using a lagging indicator to define the underlying trend. And because it's lagging, of course, it will shift its nature a little later. It will take its time to revolve from a downtrend to uptrend or uptrend to downtrend. I'm primarily talking about zones like this, where from a well-defined downtrend, the stock to move into a well-defined uptrend, the moving averages will go through a zone of, let's say, transit, where there's no well-defined trend. And this is fine. I'm not saying this is again a negative aspect. This is completely fine, because there are such zones in prices in the market where a trader should not do much. It should wait for the trend to develop. So it's fine. But my objective and my search was, can I get something more out of it? Can I understand the underlying trend? Can I also get some kind of a zone of support and resistance? And can I also get a little bit of more information? What more do I want? The momentum is something I cannot get from this. Can I get volatility out of this? Can these three moving averages tell me that prices are quiet and range bound and are about to break out? Can these moving averages tell me that there has been a big breakout? Now, to some extent, when we know prices are significantly away from moving averages, like in these aspects, when we see that prices are significantly away from the moving average, we know they will revert back to mean. Or when prices are right at the moving averages and not going anywhere, we know it's on the verge of a breakout. We know this to some extent, and yes, it works. Can I improve upon it? And so I had this thing back of my mind all the time for many years now. Volatility through the lens of Bollinger Bands. That's something I had walked upon, re-walked upon multiple times with some degree of success and failures. This is another such an attempt. So I'm going to remove my averages and I'm going to bring in the first river. This is nothing but a Bollinger Band, a 20 period or a 21 period. I can use 21 period, which is the middle line of my triple moving average. And I've taken the standard deviation 1. A basic understanding of standard deviation 1, the Bollinger Band with standard deviation 1, would be close to 65 to 68% of the prices over the last 21 days should fall within the band. So I won't be exact, but if I just roughly, okay, now I think TradingView offers us tools, very unique tools where I can find out 21 days, right? Yes, there you go. So this is 21 days. Now if I can mark it for you, this is what I'm talking about. Let's zoom in. So what this first river, this river which looks, and I've purposely kept it in blue, means that if I look into the last 21 days of price action, look at the closing price, and in this time frame, 65 to 68% of the closing prices should ideally fall within one standard deviation, that is within the river. So we can clearly see that, of course, a bit of it is outside the river. Quite a bit of it. Recently, almost 5-7 days are outside the river. What does it mean? It means this is that 30 to 35% of the market data which is trending. Means the prices have started to trend or in a trending zone. When I bring in another Bollinger Band, and this one is the same time period, I'll move it up to 21 with the 2 standard deviation. This is the second river, or let's call it the river bank. This is a simple Bollinger Band with 2 standard deviation. How do we read these two now? If prices are within the river, it's apparently to some extent range bound. If it goes outside the river and hits the bank, that is, it's overflowing, it means it has picked up momentum. It has picked up trend. So there can be 2 types of move: going outside the river on the upside or falling below the river on the downside. Coming below the river on the downside is indicative that prices are trying its best to overflow on the downside, and an overflow on the upside is an indicative that prices are trying to move into an uptrend. You would know that markets do not tend to trend for a long period of time. 30 to 40% of the time they trend, and rest of the time they prepare to trend. That is, they consolidate, they are range bound. So as long as prices are within the river, we are in a no trend situation. And once it starts to trend either on the upside or the downside, it will overflow beyond the river. That's where we have the banks. So to the current perspective, right now, we are in an uptrend. And we have been in an uptrend since 28th of May 2020. This is where it moves outside the river. It stays outside the river, it comes down, and it never breaks below the river. So we will use this concept going forward as a trend determination. Of course, there are various angles to it, but I will today in this video particularly talk about only trend determination and pullback trades. So this is the day the prices move outside the river, and it's an indicative that it is trying to trend. And that indicative nature is confirmed because yes, it trends. The first sign that it has picked up a good trend is it touches the bank, in this case the 2 standard deviation, and it keeps on hugging it, as in it keeps on touching it. When you have prices, your candlesticks or bars, which are continuously touching the upper or the lower Bollinger Band, it's a clear sign, clear-cut sign, it has picked up a trend. Now, once you've picked up a trend, it's ideal for pullback traders like us to buy on dips. So the moment prices come down within the river, this river is going to act as a zone of support. Also, of course, you have the middle line, the 21 simple moving average. And when it comes inside the river, this is an indicative that, okay, this is where you should look to do pullback trades. There are many facets to this, but we're not going to go there in this video. So one, it helps us to define the trend, the breakout. Second, it will help us to gauge and understand and judge whether there's merit and strength in this trend or not. Now, what if it overflows the bank? Now comes the third Bollinger Band in the list, and in this case also I'll shift it to 21 with a 3 standard deviation. Now I'm talking about 99% or a little more than 99%. Means it is very rare that prices will go outside the 3 standard deviation. And if it does, and when it does, like in this case we saw in this current fall, this one, it's a sign that the market is in an exceptional strong trend. Either it's going to bounce back very soon, immediately, or it will continue. These are the exceptional cases. Now, how do I see this? How do I read this now? This is the Nifty. Let's say we go on to some kind of a stock, it will be easier for us to talk about it. Let's say we talk about HDFC Bank. Okay, and this is the futures data of HDFC Bank. Now, HDFC Bank has recently moved outside the river. Okay, so it has gone up to an uptrend. Before, it had slipped down below the river, came down to the banks and bounced back to the averages. This is where a pullback trader will short the Nifty, HDFC Bank, for this small fall. And later on, we have a movement which has taken HDFC Bank above the river. So now HDFC Bank has moved into an uptrend. And for the last 1, 2, 3, 4 days, it is continuously touching the upper Bollinger Band, the bank, the green one. So you can see this as a river, you can see this as land or green grass. So, and the next one is, let's say a red alert. Now, this particular zone, which is between the red alert and the banks, is ideal for contrarian traders, those who love to sell on a rise or buy on a dip. This is where you should be interested. You should not be interested anywhere and everywhere, because a contrarian trader needs to show a lot of patience. It doesn't come that easy. And I've noticed for all the contrarian traders, the one where you patiently wait for the right opportunity is the ones where it works best. So it has multifaceted use. One, the river will decide whether the markets are about to trend or not. A very good example of this will be something like State Bank of India, what it did recently. You'll notice State Bank of India has been in an uptrend since 3rd of June. Bounces back, comes down to the river, tests the average. This is a pullback buy opportunity number 1, number 2, number 3, number 4. And this is what I want to focus upon. Look at this zone. This acts for really good for breakout traders also. Now, this is what I wanted out of the 3 river system, or what I want compared to the moving averages approach. You know, when you look at this zone, when you look at this part, you know that prices had moved above the river uptrend and it never went below the river and closed. So the uptrend is intact. But when you look at the width of the river, this is that area where the river has narrowed down significantly. Of course, those who understand Bollinger Bands, you'll call it a squeeze, you'll call it a range contraction. So I know, or we know, that this stock is preparing itself for a breakout. It's a volatility indicator. It does not tell us upside or downside, but at least we know it's preparing a move. That's also very important to know, that a stock is preparing a move. This is apparent in many stocks. Recent bounce back or recent breakout that we've seen in many banking and financial market stocks have given this kind of breakout. And now State Bank of India, you can see 1, 2, 3, 4 consecutive days it is touching the bank. In fact, it has almost touched the red alert level also. This is where it touched the red alert on the upside. This is where it touched the red alert on the upside. On the downside, when it was cracking, it never touched the red alert here. It touched here, here, and here. So, multiple information we can gather. Determine the trend, judge the strength of the trend. We know that going forward now, SBI, after a long period of sideways movement, has moved into a strong uptrend, and we should be looking to buy on pullbacks. If you had taken any trade at lower levels, you'll know that now it is touching the red alert zone, and one should look to trail your stop loss aggressively, book partial profits, or take the profits off the table. There are, as I was saying, various other angles to it. Depends on what kind of trading strategy you're implementing. Are you looking to do a contra trade? Then your approach should be a little different. Are you trying to do a pullback trade? Then of course your approach should be a little different. But whatever is your approach to do a contra or a pullback swing trade, give it a try. Share your thoughts. Give me some suggestions also where I can use it and improvise upon this. But I think that this is a simpler, unique approach in which not only do I get to gauge the trend, but decide what I'm going to do with this chart going forward. And yes, in tradingview.com, this looks beautiful. And the credit goes to the interface. The way it looks here may not look so beautiful in other charting platforms. It may look a little cluttered. 3 Bollinger Bands is not that easy on the eye. So you can hide a couple of them and use primarily the first one. And then when you get a move, you can check what is it doing. Has it entered the contra zone or not? And then if your software makes it look very cluttered, you can hide them or bring them back again. Let me know of your thoughts, please. This is something that I have been working on of late. I have improvised upon this and I have created a trading strategy called the 3 river trading strategy. But the first step of that trading system, that trading setup is this. Decide the trend, figure out the zone of support, figure out where the trend will reverse, figure out where it is that the trend is strong, and also figure out the level or the zone where the trend has high probability of reversing down. So many things combined in one simple approach, which I've named the 3 river trading system. Thanks for watching my videos and motivating and inspiring me to work more and better. Definitely let me know what you think about this approach. Share your thoughts. I'll be very happy to listen to you and improvise and improve upon this approach of trading. Thanks a lot. Do take care of yourself and trade well, trade wise.